On behalf of Qtr4 Shares and Securities Private Limited, we welcome you all to the Q4 FY18 earnings conference call of Infibeam Corporation Limited. I take this opportunity to welcome the management of Infibeam Corporation Limited, represented by Mr. Vishal Mehta, Managing Director, and Mr. Hiren Padhya, Chief Financial Officer of the company. We also have on the call Mr. Vishwas Patel, who is the CEO and founder of Remittances India. We'll now begin the call with a brief overview about the company by the management and followed by the question and answer session. I now hand over the floor to Mr. Vishal Mehta for the opening remarks. Over to you, sir.
Thank you very much. Good evening to everybody. On behalf of the management of Infibeam, welcome to our fourth quarter in fiscal year FY18 earnings call. On May 30th, our board of directors have adopted the results for the fourth quarter and the full year. The results have been uploaded along with the press release and earnings presentation on the stock exchanges and also on our website. I trust you had a chance to go through the same. I would like to first discuss the evolution of Infibeam, especially in the last 2 years, which has shaped us, before I get into the business and the financials and the updates regarding the same. With me, I have got Hiren Padhya and Vishwas Patel. Hiren is our CFO. He will walk you through the financials as we go through the presentation. And Vishwas will walk you through the strategic growth opportunities. Vishwas is the founder CEO of Payments Business as well as the director of Infibeam Corporation Limited. I'm now going to slide number 5, which is around Infibeam Web Services. Before I go into that, we are very happy to announce that we have proposed a name change of the company from Infibeam Corporation Limited to Infibeam Avenues Limited, given due recognition of our payments business. Our transaction platform as a vocabulary, we call it Infibeam Web Services or IWS, which includes most of the services that we provide to merchants. If you go to slide 6, and if you refer to the blocks, I would walk you through most of the services that we provide to merchants. On the left-hand side, we provide a platform which we call Build-A-Bazaar, which is a web ERP as well as a store builder solution for large as well as small clients. That is the business that we started out with, whereby we provided these platforms to merchants and brands to be able to sell their products and services online. Over time, in the last 2 years, we've evolved the platform to making it more transaction-based framework. Each of these services are offered on the cloud. In other words, they are neutral, stateless services that can be offered to a single merchant or a consolidated bunch of merchants. CC Avenue is our flagship digital payment gateway service. It also includes Bill Avenue, which allows us to take on utility payments along with merchant digital payments. We have opened up the platform and the framework to the government for their flagship program called Government e-Marketplace, which Vishwas will cover during the strategic outgrowth part of this presentation. Unicommerce, which is of a recent acquisition, we have been very fortunate to be able to complete the entire offering to merchants by taking control over Unicommerce, which is a warehouse management system or warehouse management solutions, which is offered in the cloud. Just to give you some overview of our services portfolio, we are able to provide a digital payment gateway to merchant, whereby merchants can accept payments across 240 different payment options in India through debit card, credit card, net banking wallets. We are able to provide a complete web and a mobile front, whereby they can display their products and services and sell to consumers online. That includes a web ERP solution that manages money flow, process flow, everything to do with order flows. Unicommerce completes the entire offering by providing warehouse management solutions. And by warehouse management solutions, we mean inbounding the product into your warehouse, storing the product, picking the product so that when the order comes in, you would want to ship it, packing the product, as well as invoicing the product before you hand it over to logistics. And we will cover in greater depth what Unicommerce adds in terms of the capability. The other part that the Unicommerce as a system helps us is in opening up multi-channel, which we will talk about. Overall, we are working towards offering more services to merchants to broaden our merchant base and to increase the revenue that we can generate per merchant. I will now move to slide 7. This slide is a very important slide that reflects the strength of Infibeam today. Our full year revenue nearly doubled. It grew 90% year over year. We are very confident that by FY19, we would have crossed our revenue of 1,000 crores a year, which is a significant milestone for us. Our full year EBITDA margins improved to 22%. This was due to the kind of scale that we generate as part of our offering. We posted highest ever PAT of 88.1 crores, which is almost double from prior year. It largely comes from the higher transaction value and the volumes that get generated through Infibeam Web Services. As you are aware, Infibeam Web Services, as they scale and generate better profitability, that the marginal cost versus the revenue generating opportunities have a non-linear function. And as a result, you will notice that as our payments business scaled from a 12,000 crore net processing volume in FY17 to a 21,000 crore FY18 number, that we were able to handle without actually having large increases in our cost. Some of our growth strategies have also allowed Infibeam to record very strong revenues and profitability. For example, we focus on bringing on some very established marquee brands and business online. It helps us in quickly generating better revenues and returns. For example, in the last year, we were able to bring Amul, which is the largest dairy, Adani Wilmar, which is one of the large FMCG companies, Government e-Marketplace, which is related to government procurement, Taj Hotels, Oberoi Hotels, Vistara, Indigo, and the name continues on. We are focused on offering an integrated platform to merchants to increase our revenue per merchant and also to acquire more customers. We appreciate that as we offer our platform to merchants, due to our integrated and wide platform offering, that we have started talking about the total number of merchants on Infibeam Web Services. We have more than 400,000 merchants using Infibeam Web Services. These are registered and active with us in the trailing 12 months. This count of merchants who are using Infibeam Web Services is perhaps larger than any other e-commerce company in India. We have also transitioned now to a very transaction-based pricing model from a subscription-based pricing model. Due to the nature of our business, more the transactions, more is our growth. And the profitability increases due to operating leverage due to the software as a service business model, which is enabled by using our technology. Moreover, we are also scaling our platform business across industry verticals, which allows us to broaden the merchant base as well as grow our customers in different segments. We'll be able to offer an integrated offering to merchants across all these verticals to increase the market share across the board. I'm now moving to slide 8, which says we have a decade of experience in building out this leadership in e-commerce. As you can see, we've built our platform to handle scale, as we also start offering end-to-end platforms in international markets as well. While there are a lot of numbers and verbiage, I'd like to capture that the total number of merchants will be a very important reason for us to cross-sell different kinds of services to the same merchant base. We are fortunate to report 21,055 crores of transactions, about 100 million plus transactions processed successfully on the platform. We are able to provide a lot of other services to the same merchants. On the right-hand side, you have WMS and omnichannel leadership of Unicommerce that talks about how many packages go through the warehouse management services offered by Unicommerce. We have 120 million packages getting delivered, more than 10,000 sellers on the platform, and $1.5 billion of GMV being processed through the WMS systems. In summary, we have a very, very differentiated business model, one that allows us to provide an entire offering of software as a service framework to any merchant or brand who wants to go online. And each of the services can be provided as a separate service as well as an entire offering. That allows us to capture more and more of the merchant's wallet, and it also allows us to build out more additional services to be able to provide to merchants. On slide 9, I'd like to cover the profitability and the growth metrics. Thanks to the scalability of our Infibeam web service platform, as well as the focus on our profitability, that we've been able to achieve scale and both operating leverage. Our revenues have nearly doubled to last year. EBITDA and PAT have also increased multifold over the years, and our margins are consistently improving year over year. Just as a reminder, last year, we've merged CC Avenue, which is Avenues India Limited, as part of our merger, and as a result, the entire purchase price allocation as well as all the expenses of the merger have been recorded and fully accounted for in our financials. We recorded a profit before tax of 115 odd crores, as well as a PAT of 88 odd crores. So as our revenues have scaled, so have our EBITDA and profits, reflecting our operating leverage and scale. Our services segment is something that we are very excited about, which has been the focus for the past several years. The web services business that we categorize in our vocabulary has grown 239% year over year. This migrated from being a subscription-based framework to a completely transaction-driven framework. The services segment, if you will, has grown at that rate given the different kinds of services that we continue offering to merchants. We have more than 8 million plus users using our checkout services with cards on file. Moving on to slide 11. Our product segment is the one which we think we will have to work upon to be able to achieve scale on. If you look at year over year, you see incremental change to the product segment. This is the business where we offer products as an opportunity for customers to come and purchase. So product revenue is reported as GMV, which is the gross merchandising value. You see in the ecosystem, as more and more e-commerce marketplaces subsidize and achieve scale by offering it at a very exciting price to customers with the hope that there could be a potential profit in the future, Infibeam has always taken the view of making sure that we work on the per unit economics and grow it profitably. In other words, whenever we have a per unit economics which is negative and you scale it up, that you would have a much larger loss, we have taken a conscious view of growing it more organically and in a profitable fashion. While we have a lot of opportunities to focus on in this area, our strategy is to focus on what we call the product tail. And I will take a minute to explain what that product tail is. You see, whenever you have a merchant or a brand selling products, a brand typically has a set of SKUs that account for majority of the revenues. There is, in many cases, a 80-20 rule. In other words, 20% of the unique products will make up 80% of the revenue. But the remainder 80% of the unique SKUs will also have a value for a brand. And traditionally, the distribution channel do not carry this 80% of the unique products because the velocity of the sell-through is very low. This is a real problem that the industry faces, and we would like to provide more and more services, fulfillment services, logistics services, to be able to capture the pie. Whenever that happens, the margins on those products which have lower velocity are always better. And hence we are able to generate higher profitability out of such products. With the introduction of GST and with the earlier VAT regime, some of the arbitrage is gone, that we believe it becomes a very, very interesting opportunity for us to focus upon. In the past 2-3 years, we have not made significant progress in that, but we have made progress on the per unit economics and making sure that we drive this business profitably. We will continue to do so, and we will want to make sure that whenever we find very interesting and exciting opportunities, it will be sharing with you. I want to move to slide 12, which is about Infibeam Web Services and how it, compares to the universe of how e-commerce is growing in India. You see, every part of the ecosystem that we are building up, while it is an expense for most of the e-commerce companies, when you think of payment gateway, it is an expense for most e-commerce companies. Similarly, when we think about web and mobile frameworks, when we think about web ERP solutions, when we think of warehouse management solutions, when we think of logistics solutions, it's an expense for any company that wants to get into e-commerce. For Infibeam, it's a revenue opportunity. And we've been able to successfully grow this, given that we've been able to build it out as a utility to convert our expense into revenues. So when we offer it, not just to one but many, that it becomes a service, and that service allows us to keep on generating more and more accruals out of merchants. I'm very happy to report for the first time that we processed upwards of 21,000 crores of transaction value, generating the kind of profitability that we did. We are also equally excited about two opportunities that we launched later part of the year, last year, which we believe are highly scalable, one that allows us to continuously expand our offerings. One is the government e-marketplace. Government e-marketplace is an opportunity where central government procurement happens online. So instead of going through the traditional offline mode, that merchants can come sign up on GEM, and they are able to provide products and services to central government departments and organizations. If you go to the website called gem.gov.in, that there are some real-time stats that get provided. As of May 30th, there are more than 100,000 unique sellers that are signed up on GEM. There are more than 8,000 crores of transactions that have been enabled on the system. There are more than close to about 500,000 orders that have been punched in through the marketplace. The reason is, while less than 5% of the demand is still gone online, the opportunity to get to a much larger number is very exciting for the company. As a reminder, we get a transaction cut out of each of these at a processing value level. So the company earns on every transaction. Bharat Bilpay is the next opportunity that we launched last year, later part of last year. As far as the payments is concerned and platforms were concerned, we were only focused on goods and services. We realized that utility payments, which is aqua tax, municipal tax, water tax, including electricity, gas, many of them, there are crores of bills that get generated every day as per stats reported by the government. That if we are able to offer that as a service, then it becomes a significant opportunity for us to generate revenue. We were very fortunate to be one of the 9 companies, non-banking companies that got a license from RBI to be able to offer such services. We have operationalized it, and as of today, there are more than close to 250,000 agents already live on our system, while the registered base is much larger. Now I'm going to slide 13. Slide 13 talks about our growth drivers. We have the opinion that the industry dynamics are improving and that e-commerce is at the cusp of very, very strong growth going forward due to a variety of factors, some of which, of course, are highlighted over here on the slide. We believe that whatever services that we are building up, that digital does not have boundaries. That you see, whenever you have a merchant who is coming on to you or a brand utilizing your framework, that they may have presence across multiple markets. And we believe that apart from providing services to such merchants in the country, that we can also expand with them and provide them the same or similar services in other regions. There's been a rising interest from the community that we cater to be able to use our services in other markets. Hence, we believe it is just the beginning of an emergence of a very new era for our company, one that allows us to cater to merchants across geographies. I'll now hand over the call to Vishwas Patel, who will now walk you through the strategic growth drivers of the company. Vishwas, over to you.
Vishwas here. Okay, so if you move on to slide 14, it just speaks about the growth and in India and internationally that TV and has the certain suggestions. So if you go on to slide number 16. Okay. So if you look at this thing, so what I want to highlight on slide number 16 is that because of our integrated offering, we are able to add high number of merchants on our platform. So the currently the number of merchants on our platform are over 94,000. However, unique number of merchants using either of our IWS platform, be it our SaaS stores or a 60 Avenue payment merchants or the gem sellers or the Bill Avenue agents or the .Tripolo domain users are over 400,000. So the opportunity for us going ahead to earn higher wallet share from our merchants by offering one or more of this IWS platform is significant. At the same time, we anticipate that our IWS platform users will also keep increasing beyond 400,000. If you move on to slide number 16. Slide number 16 speaks of our acquiring of the Unicommerce and how it will provide value to our merchants. So Vishal has already mentioned earlier on the call a bit about Unicommerce and why it makes sense for us. But in this slide, I have highlighted the value proposition and the advantages for Infibeam has on buying Unicommerce and the philosophy of the management of the Unicommerce. So you're already aware we bought Unicommerce in an all-stock deal from Snapdeal's parent Jasper Infotech. So Infibeam will be issuing optionally convertible debentures on preferential basis to Jasper Infotech to the value of around 120 crores or 1,200 million rupees. These deals we expect it to close in the next 3 to 5 months. We think that Unicommerce will actually lead our growth and we will be able to offer the most sought-after service in retail industry, an order and inventory management tool and warehouse management system for merchants selling through various marketplaces online as well as offline, and having multiple places to operate obviously, be it online or offline. So while Unicommerce will be able to show all this to a single window, and it will seamlessly work or integrate with the seller company's existing ERP systems. So together with this, we can plug the payment gateway for the merchant, therefore providing one more layer of transaction platform and increase revenue per merchant. So we have the opportunity to offer Unicommerce to all the sellers on GEM who will be selling on the government e-marketplace platform, and it comes integrated with all the logistic providers which can assist these GEM sellers to manage their delivery as well. And since Unicommerce has presence in international market, we can expand our IWS platform in the lucrative international market as well. As you already informed earlier, Wadi in UAE is already started. It's a very known marketplace there. The best part of the deal is that management shares the same philosophy as Infibeam, so that is focus on profitability. With this, I'd like to take you on the slide number 17. That is about Unicommerce numbers. So if you see, Unicommerce is growing at a 25% CAGR. The spike in FY 2017 is due to a one-time revenue of customization for Snapdeal. Unicommerce has double-digit EBITDA margins and is PAT positive. So reason for its growth and profitability can be attributed to the marquee customers that it serves, for whom it manages over 100 million packages annually. And the pricing model is based on transactions of packages delivered. So it's not a subscription base, it is per package delivered. So the more the package, the more profitability. Also, it is integrated with over 100 plus ERPs, making it one of the most preferred omni-channel forms for merchants. If you see on the right, some of the clients already using it are Lenskart, Myntra, Jabong, Cantabile, Clarks, Lacoste, Wadi from the Middle East, etc. Basically, we believe that Unicommerce is a very strong e-solutions player with a profitable track record. It provides immense opportunity to Infibeam to scale and can help Infibeam create largest e-commerce enabled ecosystem for businesses along with the other IWS platforms. I also now would like to take to slide number 18, which is of the CC Avenue. So CC Avenue is a leading payment gateway in India, which has with comprehensive payment options and multilingual skills. It can process payments in 27 international currencies, including all the top currencies, perform analytics, and also has fraud detection systems built into the payment platform, amongst others. It is amongst the oldest fintech in India and has the largest number of marquee clients and a profitable track record for the last 18 years. Since we began operations here in 2000-2001. We are India's first third-party neutral payment gateway. I'm also here as a co-chairman also of Payment Council of India. We have immense experience in working on all the issues that the payment industry is facing. So if I were to name some of the most of the, I would say 92 of the top 100 merchants in the country use CC Avenue Payment Gateway. Now we also have presence in international markets. Over the last few years, CC Avenue has grown as a CAGR of nearly 50%. So this year also, we have posted annual revenue backed by a strong payment processing of 21.6 billion. So payments processed during FY18 increased by almost 75% year on year, and payments processed in Q4 were over 7,000 crores or 70 billion rupees, a quarterly record for CC Avenue. CC Avenue also did almost 1 billion every day in the last 45 days of Q4. So we are already on a 100 crore a day benchmark. We are also seeing a similar momentum in FY19. If this momentum continues, CC Avenue will process in excess of 36,000 crores or INR 360 billion in FY19, maintaining if we maintain the same payment process growth rate. We have also acquired Wavian to expand our payment platform in the Middle East region. if we are aware, Middle East is also seeing an increase in the use of digital modes of payment. Similar to India, it has a large cash-based economy and offers a great potential with relatively higher spending per person. So overall, we see digital payments in emerging markets like Middle East, North Africa, Eastern Europe as a big potential for us, Infibeam, to scale in this market and also offer our integrated multiple platforms that we have. So I'll take you on to slide number 19. Some of the new clients, I think Vishal has already mentioned, but we already added Taj Group of Hotels, Oberoi, Airtel, Reliance Jio, Idea, Indigo, Vistara, Emirates, Bajaj Finserv, Ashok Leyland, Honda, Maruti, and Vivo, and many others. So if you move to slide number 19, I would like to discuss some of the scalable business opportunities that we can digitally power merchants in India and globally. So on the slide number 20, some of the big wins that we already have this year it includes the GEM contract, the government e-marketplace. We also won contract from on IWS platform from NSDC for skilling resources. GEM project contract, I hope you all are aware, it's all procurement of the central government and at least 19 of the state governments will happen online. So all procurement will go out to the GEM platform, which is the entire infrastructure. The technology solutions platform is powered by Infibeam. And there is a percentage-based revenue that we make on every transaction. We also want to speak in the utility space. We are already working on the Bharat Bill Pay systems. So we'll be moving on from collecting not only electricity, gas, municipal aqua and property tax, but we'll be slowly going ahead with moving on from school fees to examination fees to mutual funds, insurance, and it will be going forward. For the hospitality sector, we also provide a central reservation system, a central distribution platform to close to 1,000 hotels across India who pool their inventory in our systems, and then and as well as we provide the entire technology for a booking engine for their branded website, as well as distribute their inventory to the online travel agents like Make My Trip, Dear Trip, Yatra, EasyGo One, Booking.com, Hotels, Agoda. So from a single platform, from a hotel perspective, it's just not a vanilla payment gateway. It's a complete platform, a central reservation platform where we can put inventory onto its own website as well as distribute it worldwide into the OTAs as well as the global distribution systems, be it any of the GDSs, which is... Sorry for inconvenience. Yeah, so WorldSpan, all those GDSs also. Many of the top of the online hotels use our platform to distribute their inventory. The payment gateway is also attached to it, so there is a transaction revenue over and above the subscription revenue that we get for providing this platform. It's a huge opportunity in India, and it has enhanced margin in hospitality than any other sector. We also offer remittance services for B2C and B2B. Our remittance platform is also being used by some of the 10 top banks in India for inward and outward remittances in real time. I'll take a minute here to indulge you. India is the highest recipient of foreign inward remittances in the world. Almost $70 billion of remittances come in. So we build the platform. We have invested in a company where we have built this platform where it enables the banks to allow American NRI to transfer money to their Indian relatives and presence in real time. So some of the top banks like Axis Bank, Kotak Mahindra Bank, Yes Bank, almost 8 to 10 banks are already using our remittance platform for doing this remittances. I would then like to move on to the GEM platform, the slide number 21. Here, Vishal, you would like to take on from GEM over here?
Sure. Thanks, Vishwas. So GEM has the potential, like I said, to becoming one of the largest marketplaces in the country. The addressable market in GEM is about $100 billion for central government. That essentially makes it or poises it as one of the largest marketplaces, e-commerce marketplace in the country. GEM, the good thing is, does not require most promotions as the usage-based commerce kicks in. You see, there is already demand from the government, and hence that demand will drive a lot of sellers to come and sell on them. And as a result, the opportunity for sellers to be able to get transactions is significantly high. By providing the platform through Infibeam Web Services, we get to earn on every order based on the value of the order. Incrementally, it is net profit to the company. So as GEM scales up, it becomes an opportunity for us to generate more returns for the shareholders. The next slide, 22, talks about Bharat Bill Pay. Bharat Bill Pay is, again, a very large opportunity that we started in the later part of last year. It's around utility payments where CC Avenue originally had a very little presence, and Infibeam Web Services as a platform also had no presence. The platform that is created with Bill Avenue, it's being built with a very strong foundation, and it already has lakhs of agents and many billers coming onto the platform. NPCI has recently shared many of the statistics. NPCI is the National Payment Council of India, where the industry transacted on an average 1 million transactions every day on Bharat Bill Pay system. You're talking about 10 lakh transactions on a daily basis. 31.5 million transactions were recorded in the month of March 2018 alone, worth 30 billion rupees or 3,000 crores. So the industry has currently onboarded as much as 1.7 million agents. These are the agents who give the value of the transactions that we talk about. Hence, our presence in that opportunity makes a significant, perspective in order to be able to generate the kind of processing volumes that we talk about. It's estimated that the size of bill payment market in India is expected to reach about 9.4 trillion rupees by 2020, as per research done by a firm called Ken. And all the big payments, including payments for financial service, education, and future, will be linked to Bharat Bill Pay systems, which exponentially increases the transactions that can be potentially possible on the BPS platform. Since BPS revenue is transactional in nature, it provides an opportunity for us to be able to expand further on. Apart from having our own platform, which we have given to large number of agents and billers, we will also work with banks to be able to provide a powered by platform under the bank's own network. This also gives us an opportunity to potentially become one of the leading bill payment processors in the country and to get a much higher market segment share in the utility space where we had negligible presence. Finally, on the slide 23, which is related to remittances, you see, as you know, remittances is a $70 billion industry. And when you have a large remittance coming, that most of the merchants will use SWIFT and other mechanisms. But the per unit cost to send a remittance is very high. So when you have a very low threshold value of remittance that you would want to send from foreign country into India, that such opportunities as SWIFT will almost become, not economical. Hence, what we have done is we've created a platform by investing into a company as an anchor investor. The name of the company is Remitguru. And for residents who are living international, who want to transfer money to India, that they can actually do that using either the bank remittance engine, which is powered through the company, or to go to Remitguru and to send money. Some of the banks, like Vishwas mentioned, have already started using our remittances platform. And we believe that the potential size of the remittance is significant for us to be able to offer such services not just to banks and residents, but also on e-commerce companies who want to accept payments internationally. You see, rather than a resident sending monies to their friends and relatives and family in India, and then someone purchasing on an e-commerce website, the length of the process is a very long process. Instead, that they can actually transact directly. And that gives us an opportunity to be able to explore further in terms of capturing more of the transaction value. I will now hand over the call to Hiren Padya, who is our CFO, to discuss the financial performance of Infibeam.
Thank you, Vishal Bhai. Good evening, everyone. I'll just discuss the financial performance for the quarter FY18, as the annual figures have already been discussed by Vishal Bhai in the earlier slides. Slide number 25 and 26 is basically related to financial performance snapshot and the consolidated financial performance. Our performance during the quarter and even for the full year FY18 was excellent, mainly because of the stellar performance from our IWS, that is Infibeam Web Services platforms. Our consolidated Q4 revenue nearly doubled to 2395 million from 1209 million in the same quarter previous year. Our service revenue grew by more than 200% year on year to 165 crore. On one side, we have added over 5,000 merchants on the platform, which directly contributed to additional revenue. Secondly, this quarter, CC revenue processed highest ever payment in the history of the business, and it is more than 7,000 crore on a quarterly basis. If we analyze the figure, last year figure for the same was more than 21,000 crore. And this has helped to increase the overall revenue. In case of product segment, which has posted a record 10% gross margin, which is mainly due to shift towards the high margin products purchases. Our consolidated EBITDA grew by 91% to 452 million. Now moving to slide 27, it is basically key segmental highlights. This slide is just an extension of service segment and the product segment operating margins. As you can see, Q4 segment EBITDA has sharply grown in Q4 FY18. This is on account of two reasons. IWS platforms have scaled over the last year, and it is benefiting from the operating leverage. And secondly, Q4 FY18 financials also includes the CC revenue also. Our product segment has done well in this quarter, has managed to earn positive 3% EBITDA, which is again highest ever. Moving to slide number 28, dividend. As a part of management strategy, we are committed for the shareholders' wealth, and this time also we are happy to announce that our board of directors have approved to pay a final dividend of 10% to our shareholders over and above 10% we paid last quarter. So the total dividend for the year is 20% on face value of ₹1 per share. I now hand over to Mr. Vishal Bhai. He will just take up the Infibeam School.
Thank you, Hiren. So as far as the goals for the company this year is concerned, while we've launched two important services, one is government e-marketplace, which has the potential to grow further, much further than what we've accomplished last year. We'll continue building upon that, as well as Bharat Bill Pay, which is the utility payments opportunity that we again launched in the second half of last year. Those are the ones that we believe will give us significantly more upside in the coming year. So while we continue building up on our existing framework by opening our infrastructure up to more and more merchants, we'd like to build leadership in some of the international markets. You see, in India, we believe we have a lot of leadership position in the payments and platforms framework. And, with some inorganic growth opportunities that we have undertaken in the current quarter, that we believe we can build up such leadership positions in some very important key international geographies. we'd like to continue to grow our merchant base and our payments volume in the country to continue our dominating positions. So we will focus on that and make sure that we are able to continue the growth momentum that we've achieved. We will transform more and more of our business to ensuring that we get a larger portion of the transaction revenue by cross-selling and upselling many of our services as an integrated offering to our merchants. There is a potential to build out new revenue streams. One that we get excited about is the online advertising framework. One that will help us in terms of generating demand for merchants. That coupled with our .000 domain, one that we believe will create an opportunity for many of the merchants to be able to generate demand, is a program that we feel very excited about, which we'll launch this year. As a reminder, we will continue chasing profitable growth. As a company, we believe in investing and forward investing in such opportunities, but we will continue having a very strong thesis in terms of how this business becomes profitable before we actually go and scale it up. I would now like to hand over the call back to the operator for questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Also, as a reminder, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. If you have any further questions, you may come back for a follow-up. The first question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Hi, thanks for the opportunity. My first question is regarding this...
Excuse me, this is the operator. Mr. Kshatriya, may we request you to use the handset, please? There's an echo coming from your line.
Hello?
Yes,
yeah.
Thank you.
Hi. So my first question is, relating to the transaction revenue. You said that you are migrating customers from a subscription-based revenue to a transaction-based revenue. Can you give us some sense of, how the growth in transaction has been over last year versus the realization per transaction? My second question is, if you can give some number of transactions, this year versus last year, that would be great. Second question is on Bharat Bill Payment System. After the launch, what kind of traction you are seeing in terms of the number of bills paid on a daily basis or a weekly basis? That will be helpful. These are my 2 questions.
Sure, thanks. This is Vishal here, and I will also request Vishwas to participate wherever he thinks it's appropriate. You see, if you look at the entire base, earlier when we gave our platform, we used to have a subscription framework, partly because you would want to have the merchants continue with you as they grow on your framework, that you do not charge more. That was the thesis that we generated about 3 to 5 years ago, and we continued on. With payments, rather than going and communicating and telling a merchant to pay us on a per transaction basis, that the moment you give a payment along with the platform, that it comes across to the merchant as a payment transaction cut. So in other words, merchants are used to paying for digital payments, that they do not have a problem or a negotiation in terms of the discussion of why is there a transaction cut on payments. So the moment you attach payments to the platform, the user see a significant upside, because the more the merchants transact, the more the company is able to get in terms of returns. So to give you some idea, last year, which is FY17, the processing volume through our payments framework was 12,000 crores. And if you recollect, in FY18, that is when we applied for the merger of the company, which is when you bring the platform and payments together, and as a result, we were able to process 21,000 crores per year. So you could see that as we generate platform and payments together, that the overall transaction value scales up by more than 77 to 80% year over year. The stickiness comes from the fact that merchants will want to have a framework and not just a payment gateway. They would want a solution and not just a payment gateway. So rather than selling, if you traditionally see in many of these companies, that they would be in the business of selling a payment gateway and not a solution. When you bring the platform and payments together, it is a solution. Similarly, you had the second question about bill payments. In terms of Bharat Bill Pay, you see, even in Bharat Bill Pay, it's not a payment gateway. It's again platform and payments coming together as a solution. In that, you have billers on one side, which is the utilities, and then you have agents on the other side that come directly or through agent networks. And the ability for us to connect the billers with the agent network is magical because you can generate a lot of returns. In utility space, in Bharat Bill Pay, you get a flat fee no matter what the value of the transaction is. There's a customer convenience fee of 10 rupees that gets generated on every transaction. The customer has to pay that fee, in which generally, and this is a general statement, economics work in such a way that about 7 rupees out of the 10 rupees would go to an agent network. And an agent network would be somebody like a Wirecard or a UE exchange or whatever you name it. And about 3 rupees is something that we net. So when I talked about the NPI stats that I talked to you about, we do not segment out Bharat Bill Pay as a separate stream. It is in the growth mode for us. What we have been able to communicate to you is that there are more than 250,000 agents that are active with us on Bharat Bill Pay. If you go to NPCI, they will talk about stats. And again, I talked to you about what happened in March 2018. There are already 1 million transactions, unique transactions, which are going through Bharat Bill Pay systems. All these million are not through us. It's from a list of providers who have been able to give, who have the operating unit license to be able to provide such services. But more than 250,000 agents are connected to the NPCI switch through our framework, which means that they are recorded in the system as our agents. And as a result, the total size of the transaction is significant. So the way we think about it is that the more agents you add, that even if somebody is able to process 1 bill a day, that it gives you a few lakh rupees every day in terms of net returns. So like I said, we have registered about 500,000 agents, out of which 50% of them are already active on our network, which allow us to generate more revenues. So we do not, like I said, segment out a specific client or an opportunity. It comes across as part of our web services framework, but it allows us to keep on offering more and more of such services and connect them to, customers.
On that, on the transaction, I understand your payment gateway will be on a transaction basis, but your the services business, X of payment was largely on the subscription business. My understanding was that is also what you are moving to, on a transaction basis.
You're right.
In that, have you seen any resistance from the customers? Because typically what happens is when you move from one billing system to other billing system, typically, they ask for some discount at least to start with. Has there been any resistance from the customers? And in that sense, I was asking that, how much has been the growth in the terms of number of transactions for the overall business, not just payment business?
Sure.
And because I think, because you're moving to a transaction-based model, we have to look at how the transactions have grown and and, how much is the revenue per transaction is drawn. So if you can throw some color on both quantitatively, it will be great.
Sure, very good. I can do that. So basically, we do not sell or convince any merchant. We add CC Avenue as a payment gateway to the merchant. So it is because the company has the payment framework and owns it. So without communicating that we have a cut of the transaction, that we start generating incremental commission on every transaction. So if we had to take a view that other than what we have, that let us start generating more out of a merchant by adding commission, that we believe there would have been a significant resistance. In fact, the philosophy of our company has always been to reduce the cost for the merchant and not to increase it. But you see, rather than positioning us as taking a commission, that we offer payments as a utility or a service to the merchant along with the platform. And since the platform is through us, that it allows us to be able to do it seamlessly for the merchant. So as a result, for the merchants, that we can incrementally start generating more revenue from an existing merchant. And I will also throw, because you said quantified, I'll be able to quantify some as well. So as we generate, processing volumes, the processing volumes historically, like I said, were 12,000 odd crores, which went to 21,000 crores on a run rate basis. It is already at 28,000 crores a year. Because last quarter alone we processed 7,000 crores. So when you have a framework that allows you to keep on generating by offering payments as a solution, that it gives you a non-linear growth trajectory. So we did not have to communicate or sell or convince, but we provide it as a solution. And furthermore, for all the merchants that get added, including government e-marketplace, which is the central government unit, that we started charging on a per transaction basis and not a subscription base. So to give you an example, in government e-marketplace, as we are part of a consortium, but we provide the core technology of the marketplace and the framework that allows the transaction to process, that we earn, and we've publicly said it, about 7 to 10 bips on every transaction. That becomes an additional revenue stream. So hence, all these specifics bring us a very transactional approach. See, in the past, when we had subscription, it was very defensible, because whether the merchant processes or not, that you still get some revenues. But when e-commerce is in this hyper-growth phase, and with addition of payments, that we feel transaction is the right way to go, because transaction gives you a very non-linear growth framework. And so quite a bit of our web services growth that you see in terms of year over year is from the transactions. So, like I said, we do not have to go and communicate an additional charge to the merchant, but what we do is we provide the payment along with the platform to merchants.
Thank you. I'll come back in the queue.
Sure.
Thank you. The next question is from the line of Tushar Sarda from Athena Investments. Please go ahead.
Yeah, thank you for the opportunity. I wanted to understand this Unicommerce and IWS framework that you have. How does it work with each other, and what is the additional benefit that you get because of this framework?
Sure, Tushar, I'll take that question. So you see, if you look at the traditional stack of what a merchant needs, a merchant would require an online format and a web ERP solution that allows the merchant to be able to transact online. And the warehouse management piece is something that Unicommerce offers. So an output from Unicommerce is, think of that as an input into our existing stack. So before Unicommerce would go and say, okay, I have got so many units of inventory, because they know everything which is happening inside the warehouse. They know what product is sitting where inside the warehouse. Infibeam without Unicommerce did not have that knowledge. What Infibeam had as a knowledge is that a system like Unicommerce will come and tell us, these many products are there, and that they're available for sale. But what happens inside the warehouse in terms of inbounding the product? Is there a product which is coming which is expected to arrive? Where is it sitting in the warehouse? Is it picked, packed, shipped? Where is it in the process of being processed to give it to the shipper? All that information was in Unicommerce as a standalone system. Now, when you see that Unicommerce, output of Unicommerce will go into our logistics solution as well as our platform framework. So Unicommerce knows everything within the warehouse which we never knew of before. And the second part that Unicommerce does, which means that now we control the entire experience. So we know exactly what is going on across the supply chain to be able to assist the merchant in terms of the complete offering. So any merchant who came to us, we did not run the warehouse management systems of these merchants. We only did what the merchant told us in terms of these are the number of units and this is the price at which I would like to sell. We did not have any additional way to help the merchant in terms of, okay, what is happening within the warehouse? Are you stuck within the warehouse? What are the systems that you deploy within the warehouse? Which means we define it as inbound, store, which is storing it into the warehouse, picking the product, packing the product, ship, which is invoicing the product. That framework comes from Unicommerce. So it is completely complementary and not overlapping at all. The second thing that Unicommerce does for us is that it opens up an omni-channel opportunity. And I'll explain maybe a couple of minutes on what omni-channel is. Which means that once you have hold of the inventory, that the same merchant can sell across multiple marketplaces. Unicommerce does not have the ability or the content management systems to be able to create a merchant's own store. What Unicommerce has is an opportunity to get the inventory of the particular merchant which is being sold on a marketplace and allowing that inventory to be reflected on other marketplaces by giving a central dashboard so that warehouses can be managed very easily. So theoretically speaking, like I said, that they would be able to know more about the inventory than any other setup. And that allows an omni-channel opportunity to flourish. So they are very, very complementary and not overlapping at all because it allows us to have merchants selling across multiple marketplaces with inventory, which means every retailer or a store owner can also use it. And when you combine the two solutions together and also offer payments, which Vishwas talked to you about, then you can have a soft POS sitting on the merchant. So anything that happens in the physical store, as well as whatever happens on the marketplace, goes through our framework, which is a fairly large opportunity that we would like to address.
So you've got back-end and front-end combined now. That is what it in short would be, right?
That is correct.
My second question was, on this transaction value, you've been referring to the volume. So that is the CC Avenues processing, right? Or is that includes the IWS also?
No, this is just CC Avenue processing because
so what is the IWS revenue and IWS value?
Yeah. So basically, like I said, we provide the platform and payments together. Majority of the merchants on IWS will also use CC Avenue as a payment gateway.
But today all are not using CC Avenue, right? Today you have a lot of merchants who...
Correct. That is right. So that becomes an opportunity for us to cross-sell and upsell. So in other words, what I can tell you, we don't segment it out, but what I can tell you is majority of the merchants on our platform use more than one service of ours. All the merchants do not use it, but when I say service, it's a web service. So majority of the merchants in our company use more than one web service from us. And that gives us an opportunity to be able to continuously expand, upsell and cross-sell our services. So if there is a merchant who would come to us and want only the platform and not the payments, that we can give it to them. And similarly, if the merchant wants payments and not the platform, we can still provide it to them. But majority of the merchants would want to use both because it's a completely integratable experience. Similarly, when Unicommerce becomes part of our service offerings, that it gives us an opportunity to provide the same. Very briefly in the call, we touched about government e-marketplace, GEM. That are we able to help GEM merchants manage the warehouse? Because these are large merchants. So like I said, GEM is using our platform, but they can also use another web service over a platform called Unicommerce. And similarly, the same merchants, should they want to use payments, if they are a smaller size or a larger size, in a digital format, that we also have an opportunity to cross-sell that. So it completely offers an ecosystem, one that is not, which is very neutral, one which does not force anyone or any merchant to be able to go and say that we will not do without, a merchant having to use all the services. One can pick and choose, and it allows us to cross-sell, upsell it.
Oh, thank you. Thank you very much.
Thank you. The next question is from the line of Amit Kumar from Ashita Capital. Please go ahead.
Hello. Can you hear me, sir?
Yes.
First of all, sir, I must tell you that you must hire a good investor relation agency who should give you a small script, because the initial opening remarks were really, I haven't attended such a long conference in my life even. Coming back to the numbers, how you expect the growth in the terms of GMV after the launch of several other payment solutions, sir?
Sure, thanks. So just as a full disclosure, I think given that our business is very new in India, and that we would like to impart more or communicate more about our business to users and stakeholders who join the call, hence we are spending more time in terms of educating and providing information about the business, and hence the length. Having said that, as far as, you mentioned what will potentially be the growth of the business in subsequent years or in the coming quarters and years. See,
so in terms of GMV, after launch of several other payment solutions, including PhonePe and B2B other payments are also coming. So where do you see yourself basically?
Sure. So you see, when you think about payment solutions, we are the B2B part of the payments, not the B2C. So maybe I should spend a couple minutes just telling you about that ecosystem. PhonePe, WhatsApp Pay, all of them, they are B2C. Whether you talk about GeoPay, or if you think about any bank wallet, HDFC wallet, or ICICI wallet, so they are all B2C. They all compete to get the customer. Customer can have their money in any of the account, and it could be UPI based or not. So rather than having the merchant integrate with each of them separately, all of these payment options are available on our payment framework CC Avenue. Which means that for a merchant, rather than integrating separately into each of these payment options, that they integrate with us. So tomorrow there will be 5 more payment options that you talk about, including Beam and others. All of them are integrated into us. So as an integration framework, rather than integrating separately with 240 different payment options and having a separate account and a separate ledger for each of them, then you would integrate into the payment aggregator, CC Avenue, and you will get everything in a console with central accounting, central ledger, central reconciliation, and no separate integration with each of them, because new payment options get added, they are automatically integrated into CC Avenue. So it's a very strong value proposition, which means more...
Vishwas here. I'll explain in little layman's term, Amit.
So, Mr. Mehta, in a nutshell, if you can tell me in percentage terms, where you see the growth in next 1 or 2 years, just in a nutshell.
Okay. So, Amit, first you have to understand, Vishwas here, I just explain in a context that is there. Now, if you are a merchant today, there is credit cards, there is debit cards, there is net banking, there are wallets, there is UPI, IMPS, and all the other stuff that is there. So today, if you are naming, say, a WhatsApp API or a UPI or a Google Page UPI or a PhonePe UPI or a Paytm wallet. What we do is we aggregate all these also. So today Paytm is live on our systems. All credit cards are live. WhatsApp UPI is live. All UPIs are live. And we make money out of all transactions. So if you are a merchant, you will integrate CC Avenue and you'll be able to collect money from any of the options that are there. 240 plus payment options are there. So today, as you see from an aggregated business, we are the strongest out there. And from the growth potential, since we can't make forward-making statements that are there, Amit, understanding this thing, but we are very strongly positioned. So today, with 400,000 plus AWS merchants on our platform and with various platforms specifically which provides end-to-end reach including payments, so I think we are very strong base there.
Okay, sir, what is your average revenue per customer right now and what are our retention numbers? We have done anything in that regard?
Sure. So what we do report is we talk about the number of transactions in our processing as well as the total value. So when you actually divide the two, you'll get the number. We said we did 100 million odd transactions and 21,000 crores. So you will see that, in terms of the processing, the average value will work out to be about close to 2,000 rupees. Averages, of course, are not an indication of all because you will have a fairly large standard deviation. But, that's, as close as what perhaps one can get in terms of the overall, setup. In terms of, what we earn out of merchants, we earlier talked about the merchants on the platform. We have about 94,000 odd merchants. And, of course, now it's a very integrated offering. Hence, we talk about merchants using Infibeam Web Services, where we earn a cut of the transaction. So, for the first time, we've reported that number. It's upwards of 400,000 merchants.
Okay. But, now, on a lighter part, there was a survey which was going on in this thing with that, which is the costliest companies in Gujarat, and you are one of the costliest company in terms of price earning in Gujarat, getting a revenue of around 90 CR and quoting at 9,200 CR market cap right now. So what are the 2-3 triggers which, as a hardcore investor like us who has invested at the time of IPO must see in your company, sir? If you can guide us, what are the risk factors right now in front of you? Because a lot of people, let me tell you, if they were guessing the new Manpasand from Gujarat, some of them are taking your name also. So this is, I just wanted to learn that what are the 2-3 things from a risk factor point of view they must look into that.
Sure. So, of course, quite honestly and candidly, I won't be able to comment on your comments because they seem to be more like rumors or speculations or whatever you call it. But in terms to your question about specifics about the company, of course, we are here to inform and not sell and convince stakeholders to be part of us. So the way to think about our company, which is that what you would want to do is, if you look at, universally, platform and payments have been very strong. And, companies which are similar in size or even slightly larger, they get traded at a much larger multiple than we do. There have been companies, one of the largest companies which is listed in U.S., they have negative EBITDA margins, so they do get traded because there's a lot of expectations. You see, you get non-linearity in businesses which are related to technology. So, in other words, the cost incrementally to give a framework or a platform to a merchant is very small, whereas in the cost of technology also keeps on reducing given that you can afford more compute tomorrow than today. So the cost curves go in the favor of technology companies. That's the non-linearity that potentially comes across. And in that, what you would do is, of course, use all the specifics in terms of understanding the company and specifics of the company before you would want to make certain decisions. But what I can tell you is that, we've continuously grown in a profitable framework. We have a very strong thesis on how to make this company grow further. We've forward invested for many, many years, and we understand the business. We come from that pedigree to be able to understand and also make sure that we make certain right bets. We have failed in many of our specific opportunities as well in terms of growing them out, but we are okay with that. we'll have to rewind and readjust and keep on growing them further. So not everything that we do is successful, but what I can tell you is that yes, I think as far as the scale and magnitude of any company doing e-commerce in India is concerned, we believe that we are in a path which we offer ourselves more as an enabler and not a marketplace. In other words, you should look at transaction processing volumes. I think that will give you a very good indication because, like I said, we report these are all digital transactions fully recorded, which means that every single transaction one can take a look and see whether it is profitable or interchange or not. And these are digital transactions by customers. Based on these transactions, that we get a value out of each of the transactions, which allows us to get our profitability right. We'll also encourage you to, of course, come down, meet up with us, and get to know us better. Because I believe that, and hence we actually spend a lot more time in terms of communicating what we do. And that you will have a better perspective in terms and an appreciation of what the company has in terms of offering. So, anytime you use a payment gateway on whatever site, if it is through our payment gateway that we earn out of that transaction. Anytime you would purchase...
If you can just tell me any 2 risk factors as a long-term investor we must look into your company, just that.
I will tell you a lot of risk factors. In fact,
which are the most important, if you can just give me guidance in short.
Materially, I can tell you we've disclosed all our risk factors when we actually, because you brought up the conversation of an IPO, we've disclosed several pages of risk factors because I think I would, what I can tell you is what keeps us, up at night is how do we compress time, which is how can we do more, than what we do today. I think that's what keeps us at night, which is can we accelerate and compress time and do a lot more than what we are doing today. And I think that, you will also appreciate that you see all the technology companies, they're built out in 10 years because this ecosystem is very evolving. So what you could do in 50 years in the past in a traditional industry, that in a technology industry you can do it much faster. And they've been very successful in terms of compressing time. And so if you are able to go and start thinking about what are the ways so that incrementally you don't have so much effort, but you have a much larger return. And, and as a philosophy, we will not focus just on profitability. We focus on scale and profitability both. So I think that's what, we would like to, maybe leave you with. So I think that, we'd love to point you to a bunch of, you could, of course, refer to the documents which have all material risks associated with our company that, maybe you could, review it.
But I will still suggest you to go for some good, intelligent IR agency who should communicate the rest of the things. There are a lot of rumors in Mumbai and Hong Kong about you. Please clear that out so that we get a lot of messages about you guys. That should not come to us. Thank you.
Sure. We'll take that as a suggestion. Thank you.
Thank you. The next question is from the line of Dhavan Shah from Qtr4 Shares and Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations for the stellar numbers in the quarter. I have a few questions. Firstly, about the CC Avenues. So, what was the revenue of CC Avenue in Q4 FY18, and what is the full year revenue for the year?
Sure. So, we've been talking about it. CC Avenue has been doing between 55 to 60 crores every quarter. And we separately reported that out, as part of our earnings call. So when you extrapolate it out and take a full year, that would be the impact. Going forward, of course, we provide it as a very integrated solution because one can provide platform and payments but keep on earning out of every transaction. So, for any merchant who wants to pay us, even 1 rupee, we can capture that 1 rupee using CC Avenue as a payment framework. And that allows us to keep on scaling up. And that gives us an opportunity also to be able to bring our platform and frameworks to the next level. So on an average, it's reasonable to assume that it will be about 250 odd crores.
Okay. And what was the EBITDA for CC Avenues in Q4 and also the full year?
We don't separately report the EBITDA in the full year, but like I said, we had a lot of one-time charges because we did purchase price allocation in Q4, and hence we had a lot of one-time charges that we have accounted for in our current financials. So there are a few merger-related, specific one-time charges which we have absorbed directly into our financials.
Okay, so other expenditure have been increased by around 30 crore something on quarter-on-quarter basis. So is that particularly because of this merger cost?
That's correct. That is right. So it is there is one-time charges.
So 30 crore is the merger cost, right? So that is the...
Not all of that is merger cost, but it's reasonable to assume that some of that is the one-time merger costs associated with this.
Okay, so going ahead, I think we can expect around 30-35 crores of other expenditure rate per quarter.
That may be reasonable to assume.
Okay, and if I look at the segmental numbers, the unallocable expenditure in Q4 FY18 is around 10% of sales. So why is it so high? Is that because of this merger expenditure only?
That's correct. So there is expense which is related to that.
Okay. And on balance sheet side, if I look at the standalone balance sheet, so there has been increase in the other current liability by 130 crore, and the same for other current asset as well. So can you please explain the delta?
Sure. So basically, other current liabilities, there are some payables to merchants. And hence you would essentially, it will be recorded in other current liabilities, right? Similarly, we will also have a lot of, monies that we have already received from merchants, okay? And as a result, you will see that will be reflected in these two, areas.
Okay, got it. Thank you.
Yeah.
Thank you. The next question is from the line of Bhavesh Jain from Envision Capital. Please go ahead.
So we have taken board approval for raising 2,000 crore. So whatever acquisition till now we have done, that we have largely done through stock deals. So the rationale behind raising such big amount, 2,000 crore?
Sure, that's a great question. So basically, you see our industry is evolving, and we have been appropriately, conservative in figuring out, what bets to take up so that they become accretive to the shareholders. So this particular approval is more of an enabling approval in nature. In other words, it's an enabling resolution in case there is an opportunity for inorganic growth. So the company is in the business of providing, of course, platform and payments, and it's positive. But we believe that there are many opportunities, both domestic as well as international, to extend our services and also to enable us to grow profitability. So, in certain areas where we find that there are some opportunities for inorganic growth to distribute our services into additional markets as well as add to our existing portfolio of services, that we have taken this up as an enabling provision.
Okay. Sir,
the board, of course, will have to evaluate every matter, and they would be able to, we'll be able to share more, as and when we take such approvals.
Okay, and sir, what any more acquisition which is there currently we have evaluated and we are going ahead, apart from?
There is nothing that is materially something that we need to talk about today. Like I said, we would continue to receive many of these opportunities and evaluate. And our internal bias is always to build, but when we find the right opportunity, that we would take it further. So to answer your question, no, nothing immediate.
Okay, and
that
so
we
what
have
is the strategy for this international operation? Because we have already done one acquisition in Middle East, that Dubai-based online payment processing company. So how do you see this international business going forward?
Sure. So, internationally, we think that the business that we've acquired is in the payment space. They do about 1 billion dirhams of transactions, which is fairly large. and about 1 million transactions. And we already have expanded our platform internationally. So again, when we bring platforms and payments internationally, that becomes a very large opportunity for us. And so to answer your question, international is a growth area. We have a lot of merchants who can utilize our services internationally, and we should continue building up on that momentum because there is also arbitrage. To give you an example, when you talk about 1 million transactions worth billion dirhams, that means that a value on a per transaction basis internationally is 17,000 rupees compared to 2,000 over here. So you see the value of the transaction, and given that we get a percentage of the transaction, it becomes a good opportunity for us to scale up our payments internationally.
Okay. Okay, sir. Thanks a lot. And all the best for the future.
Thank you.
Thank you. The next question is from the line of Piyush Shakya from Remittances Capital Limited. Please go ahead.
Good evening, everybody. First of all, I'd like to say that not everybody would be critics of the management taking so much time and explaining what they are really up to. Especially we at Remittances Capital really appreciate that. So moving on from there, I believe the FY18 numbers, especially if you look beyond the PAT, have done significantly well. So if you look at the cash profit figures, they've grown by 137% year on year. So my congratulations to the management for a brilliant set of numbers. Mr. Mehta, I'd like to understand on the Unicommerce deal with regards to the OCDs that we would be preferentially allotting to the shareholders of Unicommerce. Would they be interest-bearing? And have we fixed a conversion price with them?
Of course, the answer is there is a very, very small interest bearing. It's 0.001%. So, as per regulation, whatever was the minimal required is what the interest bearing, percentage is onto that. So to answer your question, the answer is, practically the number is insignificant or not material in terms of the interest bearing component of it. And, as far as, the opportunity of conversion and the conversion pricing is concerned, that we will be, of course, asking for an approval from the shareholders in terms of the premiumness at which the opportunity is provided. The reason why we say 3 months to close the transaction is because we will need to go through a shareholder approval to give, the convertible debenture, in which we will be disclosing the specifics. At the moment, of course, there is some amount of due diligence, and we'll be providing more specifics to you shortly.
Great. Mr. Mehta, the primary reason for our interest in Infibeam is the management's commitment to the virtue of sustainable and profitable growth, which is coupled with a brilliantly differentiated business model within the sector. However, we see that investors who believe in unduly subsidizing clients and users to gain scale have made small inroads into Infibeam by one of our recent acquisitions, which is Unicommerce. I bet, and you would agree with me, that the path from achieving scale using steroids to profitability is a long one and way rockier than it looks on paper. So can we reasonably assume that irrespective of the characteristics of new stakeholders coming in, Infibeam shall remain committed to grow profitably?
So the answer is yes. You see, historically, we have been able to look at forward investing as well in many opportunities. And what I mean by forward investing is that whenever we experiment, whenever we take up something new, that there will be a temporary, we are always thinking about long term. So in those cases, that you will see a slight, compression in terms of margins and opportunities. So we've been very comfortable in terms of taking those bets but we have very strong thesis and an opportunity. So we don't look at building out a company whereby the profitability is not in sight. We will always take up opportunities whereby we find that it's a sustainable, profitable growth in sight. So that part, I think, you could take reasonably well, that we will continue doing that.
Thanks. I'd like to understand that how well have Builder Bazaar and CC Avenue teams been able to, farm on each other's merchant base. Could you please throw more light on this?
So there's been a lot of, deep integrations that we've undertaken that allow us to create a very smart and sustainable, cross-selling opportunities. I think there's a lot more that we could do because the ecosystem, holds a lot more services. And so as a result, like I said, as we keep on building up our framework, that we can do a lot more in many ways to be able to cross-sell further. The good part about the whole opportunity, like I said, is that majority of our merchants use more than one web service, which is what we feel very happy about. But like I said, we are not complacent. We can do a lot more than what we are doing today.
Good to hear that. My final question to Mr. Padya. It's more of a request. That I've seen that there has been a significant deviation between the initially announced and restated Q3 numbers. Can I request you to put out a statement detailing the figures announced initially vis-a-vis the restated figures and the causes of deviations for the quarter 1, 2, and 3 of FY18?
Yes. See, basically, the deviation in terms of quarter 3 and quarter 4 is mainly because of the exercise of merger which we have undertaken and the accounting effect which has been given in terms of purchase price allocation. So, in the first, second, and third quarter, we have taken the draft solution report, and in the last quarter, we had finalized the valuation in terms of the purchase price allocation. So, accordingly, as per the advice of the statutory auditor, we have restated the accounts also. So, accordingly, that effect has been there. So, if required, we can just statement also. Okay.
Sure. Thank you. Thank you very much.
Thank you. The next question is from the line of Dilip Desai from Mother Investments. Please go ahead.
Hi, Vishal Bhai, and the team of Infibeam. Thank you very much for the confidence that you are giving to the investors on the business model and the future ahead. But there is still a ghost looming around from a couple of months ago, where there were two instances where the stock just corrected over 40% or around 40% in a single day. Can you clarify why a company with such a strong business model behaved like an operator-based company? That's my first question. And the second question is, 5 years down the line, so where do you see the company vis-a-vis market cap projections? What I mean is, what is the size projection of the company 5 years down the line? I would really appreciate if we can have some clarity on these, especially the first one, of course. Thank you.
Sure. So to be very candid and also in full disclosure, I should tell you that we typically would not, we're not market people, so we would not know exactly the specifics in terms of, how these reactions happen. In fact, it's quite the contrary. We think long term. We just think that we should continuously focus on the business. So while there could be perturbations, but we are not driven or obsessed by how we track what's going on in terms of the overall, but that is not something that we feel, obsessed about in terms of ensuring. So we're more in focused in terms of how do we execute to our business and business metrics and business KPIs, and that's traditionally been our approach, and we expect that the same approach will not change. It will continue building up. So rather
sorry to interrupt, don't you think investors' confidence is also part of the management responsibility? Because say for me as an investor, I look at Infibeam in the long term, but then something like this happens, it does shake up my confidence and a lot of other investors also.
Certainly. I think that, we do care about that a whole lot, and that, we would, but there are certain things that we don't control. And as a result, we are more focused on what we control, like not necessarily. So I think we think that, as the business grows, that, in the long term that, we will continue doing well. So, like I said, I think, the business and the experience and the way we would want to grow our business is what we are focused on. And that is something that we feel very excited and proud about. There are other things that we really don't control. And those are the ones that, it'd be very hard for me to explain or to communicate why certain events and certain activities do happen. But like I said, I think, if you're focused on the business and if you're focused on the long term, and if you're focused on ensuring that, we work on, these long-term, right opportunities that, if there are perturbations, they correct themselves.
Right.
So, with that said, like I said, I think the other part that we would like to do, of course, is to communicate more about what we do as a business and to reach out to the audience so that, we would continue, providing more specifics about our business to potential shareholders.
Correct. Okay, and the second question is, what is your 5-year projection? Where do you see the company market cap reaching in valuations term?
You see, we've been able to, because of the growth in macroeconomics of the country and thanks to the digital growth and also the penetration of internet, but we've been able to grow and double our business every year. And we believe that, if the same certain activities and projects that we have taken up, they have the potential to allow us to continuously grow in this crowded marketplace in a profitable and a sustainable way. And as a result, we think that if we continue building up the momentum, that, it should show up in the long term in terms of how investors think about our company. So we'll deserve the investors through execution, not optics. So like I said, in the past also, we've not focused too much on optics, we've focused on execution. And as we keep on executing to our business and our standards, that, the right metrics will show up for us. So, it'd be very hard for me to comment, but what I can do is I can tell you that, we're very focused in terms of ensuring that, we can continuously build up a long-term sustainable, profitable business, one which is scaling and also growing at a good growth rate.
Fair enough. Vishal, one of the strongest recent time developments of the company has been the government e-marketplace. Is it a time-bound contract? Is it a value-bound contract? And or is it how is it? Like in case the government changes in the center, does it affect your business and the contracts as well? Is there a chance that there can be a reshuffle to it?
So, it is a time-bound contract. The contract is for a period of 5 years and 10 months from the date of award, which was last year, later part of last year.
Okay.
So it's a 5-year, 10-month contract. So to answer that question of yours. And then...
what I meant, sorry, is it a short time-bound contract? And that's what I wanted to know.
Yes, it is a short time-bound contract. So, in other words, we will continue, we will have to work on the deliverables which were provided to us, and that makes it a 5-year, 10-month contract. You see, when, the size is so large, and when you have, lakhs of crores of transactions, flowing through the framework in that time frame, that we believe, it becomes, somewhat sticky. But like I said, that it comes for rebate in 5 years and 10 months.
Okay, and it has nothing to do with the changes at the center or politics?
No.
Okay, fair enough. Thank you very much for your time, Vishal. Really, I have to comment that Infibeam is doing a great job, and hopefully we'll keep up. Thank you very much.
Thank you, sir.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Vishal Mehta for closing comments.
Thank you all for joining our Q4 and full year conference call. If you have any questions, you can please reach out to our investor relations. And thank you for your valuable suggestions and time. We look forward to speaking to you again.